Forget about all of the noise. It's the best performing asset in all recorded history. Right? It does 140% a year returns, and that's including 3 or 4 80% drawdowns. Right? No asset has ever existed like this before. It's a fucking gift. When we needed it the most, we've been given a gift from the gods. Much like AI was a gift from the gods. We've been given something that can unfuck your future, which is the whole thesis that I've been talking about. So do that. And so it's not about liking, it's not about the culty thing, it's not about any of it. It's like, if I've got 6 years and I want to make as much money as possible, I want to own the best risk-adjusted reward asset I can. And technology is the second one. We're still in summer. So basically, if you think late summer, the weather's pretty good. That's where we are. Somewhere in the middle of summer. So the weather's good. It's easy to make money. And this is the acceleration that happens around the US election years. And this has happened every time is what I refer to as the banana zone, where everything goes bananas. And in crypto terms, the charts just look like bananas standing on end because they just go vertical. Because
the next Bitcoin bull run could be 10 times bigger than what we saw in 2016. This could be a massive once-in-a-lifetime event that will make the 2016 rally look tiny in comparison. That's the latest prediction out from Real Vision CEO, Raoul Pal. In his recent interview, Pal explained that Bitcoin's growth isn't just a lucky break. The returns have been consistently incredible, with the price increasing an average of 140% every year. And in a world where most investments are barely keeping up with inflation, Bitcoin stands out as revolutionary. Pal is convinced that the next bull run will be one for the history books, and in this video, he discusses why. Make sure to stick around until the end of the video, as Raoul Pal explains why this upcoming bull run could be the biggest one yet, and how you can position yourself to take full advantage of it. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now, here's Raoul Pal with his latest Bitcoin outlook.
Macro summer's when the economic machine starts firing up again. And that lends to another acceleration in markets and growth, whilst inflation tends to be falling or subdued. And that's a really lovely period because you can make money in pretty much everything. Commodities go up, gold goes up, small caps go up, crypto goes up, tech goes up, everything goes up. And that's where we are now. And so that summer period, the real footprint usually accelerates around the US election and after it. And that's when most markets have their best performance. So there is a seasonality around elections, which you tend to get strong first half of the year or first part of the year. Then it tends to be a bit more sideways, which we had in tech and we had in crypto, and where the rest of the market started playing a bit of catch up. And then you get the acceleration that goes on for the end of summer straight into macro fall, which is 2025, when really the best gains come of all. So that's where we are. So back then we were just starting. Now what happened? Crypto went on a massive tear, then had that sideways consolidation. Tech had a massive tear, had a sideways consolidation. The rest of the market's now catching up. And the next phase is the money shot. We're still in summer. So basically, if you think late summer, the weather's pretty good. That's where we are. Somewhere in the middle of summer. So the weather's good. It's easy to make money. And this is the acceleration that happens around the US election years. And this has happened every time is what I refer to as the banana zone, where everything goes bananas. And in crypto terms, the charts just look like bananas standing on end because they just go vertical. Because around the election period and the year afterwards, they all have to refinance, $10 trillion of debt. The Fed has not been able to the Treasury's not been able to refinance easily. So it's been issuing short-end bills, which is basically a holding pattern for rates to come down. Wait for rates to come down, and then you can refinance your rates. It's like you don't want to refinance your mortgage at highs. You want to refinance your mortgage at lows. So you keep your money in a money market fund, which is basically what the Fed did, and then they'll do that. So that period of massive liquidity tends to debase currency. We're seeing China coming out with the cowbell, more stimulus. The US has started the rate cut cycle. That's going to come down a lot. The EU have started. The UK have started. Everybody started. And so the big game is at play. So generally speaking, as I said, crypto markets tend to go bananas. So that is, we're talking currently the total market cap of crypto is about $2 trillion. By the end of this cycle, it'll be at 10 to 15 trillion. I mean, that's la land returns. But that's crypto. Crypto gives that kind of opportunity. The Nasdaq's been following this perfectly. So it just keeps going, whether we get another 20%, 50% upside in the Nasdaq, or it could be more. We don't know. You can't really tell. But the point being is the gains are huge. We'll also see commodities picking up. We'll also see, we've seen precious metals picking up. We'll see all parts of the economy and the stocks picking up as the economy's growing. Inflation's not yet a problem. And the central banks are cutting rates and adding liquidity to finance their debts. That's utopia. That's what crypto's macro summer and macro fall. It's basically market utopia. Rate cuts are actually a bit of a red herring. Liquidity really comes from central banks and governments putting money into the system. So we have something in the US called Fed net liquidity. So what is the three component parts of that state level liquidity? Well, that's driven by the Fed balance sheet, quantitative easing. They're still tightening, but they've reduced the amount of tightening. Then we have the reverse repo. And that is basically where banks mop up all of their funds. So if that's very big, money's tight. And when they start taking the money out, it goes into the banking system. The other side is the Treasury General Account, which is the checking account of the government. Now, if they've got a lot of savings and they're not spending it, which is where we are today, then conditions are tight. But once they start writing checks, what happens is that money floods into the system. And that is a kind of a net increase in money into the system. So if you make more of something and it's in abundance, its purchasing power or its value declines. So it's not that necessarily you and I get to borrow money more easily. It's not that. It's that there's more money around and it debases currency. It's like this magical thing that happens. Now, on the private sector side, the stuff like M2 growth and private sector credit growth is kind of a function of that, but they both work together because you can create dollars in a Eurodollar system. You can just create them out of thin air by being a bank. And so what happens is there is this huge increase in money that happens. But we as people don't generally get it. Sure, your mortgage rate may fall a bit, but really it's this debasement effect that happens that's more insidious that we don't see and don't really understand. Asset prices take off, but our earnings don't. So therefore we get poorer in terms of the assets we can buy. And an asset is just future deferred consumption. If you buy gold today, your expectation is you can sell it in the future at a higher price to protect your purchasing power. But today, you can buy less gold than you could a month ago, and less gold than you could 5 years ago, and because your wages don't go up in the same as these scarce assets that move because of debasement.
After recently climbing close to its all-time high of over $70,000, Bitcoin's price has dropped again, partly due to an earthquake in China, which is adding uncertainty to the market. However, analysts believe this event may actually be good for Bitcoin in the long run. Analysts David Brickell and Chris Mill believe Bitcoin could quickly reach new all-time highs due to China's plans for major stimulus measures aimed at boosting its struggling economy. They predict that these measures will create a flood of money in the market, leading to increased demand for assets like Bitcoin as investors seek opportunities in the cryptocurrency market amid broader economic changes. Do you agree with this prediction? Let us know in the comments. Now let's go back to Raoul Pal as he discusses further.
There's a large group of people who want their justice. They want the system to fall apart, to say, I told you so. you're printing money, you're creating inflation, you're doing this, it's all unsustainable. And they don't want to see that what's actually happening, this 8% debasement, is basically all of us being charged 8% for a put option on the system, which is actually maybe not that bad. But they don't want to see it. And then a lot of people who aren't invested in technology can't stand the fact that it outperforms versus what was deemed to be the right way to invest, which was the value investor, the cyclical commodity, deep value, that thing. And that's not been working for 30 years. But yet they want it to come back. So they get more angry as markets go. And then they start drawing patterns about how it's going to crash. Well, markets, unlikely to crash unless it's further out the risk curve. But markets don't crash when the business cycle's picking up. They crash when the business cycle is slowing down. And let's say the ISM crosses 50. It never happens at this point of the cycle. So really, there's no real rational argument. And the Fed are cutting rates now. They're pushing liquidity into the system. The market's buoyant, and the ISM is going to start picking up. All the forward-looking indicators are. So it's really difficult to argue that there's a bubble and it's going to pop. And when we get to the bubble argument, something else they miss is they look at price earnings and they say, see, price earnings keep going up there. It's getting wildly expensive. But price and earnings, if you remember the story of your earnings and house prices are always going up more than your earnings. Well, what is price earnings? It's the share price, which is driven by debasement, and corporate earnings, which are driven by GDP growth. So over time, as we add liquidity into the system, the everything code suggests that price earnings will keep going higher because of this dynamic. But people don't understand it. So they look to a world of the past. Now, this has actually all been done before. This is not a brand new thing. After World War II, this is what they did. They used yield curve control as a way of stimulating the economy, and they essentially grew their way out of it by refinancing the debts. And we had exactly the same 4-year cycle back from about 1948 to about 1968. So we had 20 years of it back then. Listen, there's one asset to own here, and it's Bitcoin. Forget about forget about all of the noise. It's the best performing asset in all recorded history. Mm-hmm. Right? It does 140% a year returns, and that's including 3 or 4 80% drawdowns. Right? No asset has ever existed like this before. It's a fucking gift. When we needed it the most, we've been given a gift from the gods. Much like AI was a gift from the gods. We've been given something that can unfuck your future, which is the whole thesis that I've been talking about. Mm-hmm. So do that. And so it's not about liking, it's not about the culty thing, it's not about any of it. It's like, if I've got 6 years and I want to make as much money as possible, I want to own the best risk-adjusted reward asset I can. And technology is the second one. Granted back gold, because he's a gold person, and it wasn't a debate. It was just like he was saying, listen, you should use gold. And I said, well, I think Bitcoin's the answer. And look what happened. That was the 10 years. And over the 10 years of Real Vision has been all of the greatest minds grappling with understanding this stuff.
As Raoul Pal said, the crypto market is entering the banana zone. Just as the banana reaches its optimal state, cryptocurrencies can experience sharp price increases during favorable market conditions. History also suggests that markets tend to perform well in the months leading up to US elections. That means it's very likely that Bitcoin will continue this trend in the upcoming elections as well. With the Federal Reserve actively working to maintain stability in the financial system, the fear of drastic drops in asset prices is somewhat alleviated for now. This is the time for investors to watch for massive price increases, especially in crypto. Anyway guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top-on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.